Hello everyone, this is Sam Wong from Finance Analytics Services team again. Happy Easter. Hope everything goes well for you so far. Last week obviously the market wasn't too good, but anyway, look forward with the Easter going forward. Hope things will be better. We're entering the earnings season again. Just want to give you a quick recap. For the week ending, we're not in a very good territory, but Nasdaq in particular have dropped a little bit more than what we expected. So Dow Jones was lower by 118.01 points, 0.34% decline, but Nasdaq was lower by almost 500 points, 3.47% decline, S&P down 2.26%. Microsoft, for instance, broke $300 level, again a 6.8% decline in a week. So, and I will go over this graph with you. Lately, this is just JP Morgan recently earnings comparatively in previous quarters. And this is where Nasdaq is standard with 3.47%. As you know that it have been a volatile week in the last couple of days with news, good and bad, and just up and down. But overall, it was started from the point to the lower point at the end. And Dow Jones was a little less severe. I mean, even though with volatility ups and downs in the intradays, it ended up 0.34% lower. Central bank policy decision influence data. It will determine whether investor should continue to anticipate tighter monetary policy, which there's a talk about another 0.5% potentially increase in May, which may not have a meeting, but just they will just go ahead and decide and do it. Canada already raised up 0.5%, just like last video I had mentioned to you, and that will actually be over 22 years Canada have first time need to be raised that much, and also in Europe they also potentially raising the interest rate, and Bank of England always the one that already raised the rate. At least bring it up. Investor rotating our tech and small cap shares, a tightened monetary policy become the current trigger. Raising interest rate makes it more difficult to justify lofty test company valuations. Smaller domestic companies don't have the resource and flexibility needed to strive in a high interest rate environment. So what they need to pay attention that benchmark 10-year Treasury closed right at about 2.8% for the first time 3 years. If you follow my video earlier, I said that if the interest rate will maintain around 2.2%, probably was still okay, but now way above that. And we're in anticipation increasing interest rate, which somebody talked about for the whole year, will be end of 3% rise, which is very serious. This interest rate definitely will be a lot higher than where it is right now. So a lot of company proper pricing at this point when they do forecasting, but you would hurt them for the growth stock in very particular cases and also the overall economy. But the reason for any interest rate again, the rationalization is to fight inflation. But we are seeing the history that they really didn't work that well, especially when you accelerate the rate of interest rate in rise is actually the inverse. Result hurting economy. So Powell was actually going to have a minutes again discussion about interest rate and going forward outlook with Europe in coming Thursday. So we see how it goes. If any good news raising, because the mistake I've been making, right, for most people thinking, last year should have raised the rate. It didn't. The stock market continued to be up, and now it's really, I guess you can say, this is what's now trying to catch up, and then, as soon as the market absorb and anticipating that move, then, in the long run, I mean, we see the market before your oil interest rate up and down, and then we'll adjust as it is, and then people will just accepting that as part of their valuations. Market continued to be challenged, was lower. CrowdStrike jumped 4% under Tuesday after Goldman Sachs upgrade. Twitter dropped almost 2%. Well, actually, Twitter was back up again because of the news from Elon Musk trying to buy them out at $54. Electric vehicle giant Tesla rally, almost 4% earlier of the week, and then coming back down a little bit. Stock market uptrend struggle. Dow Jones Financial Leader, American Express, along with Bob Cohn, they all actually were down. The Bureau of Labor Statistics said the consumer price index in March accelerated to 8.5% year over year. So again, that's why I mentioned about fighting inflation. Oil was hitting lower than 100%, but then you rebound over the week. We're back up on Friday about $108. On Tuesday, the API said that crude stockpile rose by over 7.7 million barrels last week, the biggest weekly rise in over a year. However, gasoline stockpile fell by over 5 million barrels. JP Morgan was the first 6 bank to release its corporate card, and again, we will cover that in the screenshot next, and just to give you a better understanding. And also, Ukraine Impact Investment Bank posted a 28% drop in revenue. Delta Airlines faster reported Wednesday. Delta share jumped more than 4%. Fast stock declined almost 2% in morning trade. Gold rebound from a sell-off. Been according to again around space trade. Interest rate. Thursday, Asian stock track Wednesday, U.S. stock action and close higher Treasury yields, and China State Council said the monetary policy tool, which made reduction in bank's reserve requirement ratio, should be used in a timely manner. Which actually Friday it was announced that they're going to decrease by a quarter point. So that's a good news. As the Chinese government's zero COVID policy mean lockdown is still in place. Shanghai Composite value 1.22% Thursday. Jobless claim jumped 18,000 to 185,000 last week after falling to a 54-year low in prior week. Elon Musk offered up to buy Twitter. Again, that's I already mentioned. And you say they will unlock the value and make democracy to be really the most important thing. That pushing that, we'll see how it goes. It sounds like every time he tweets something, there's always an impact already, the influence that he had, whether right or wrong. And then 10-year Treasury again, that's just really the biggest hitter for why last week the market was down on Friday. 1% highest level since late 2018. Apple fell 3%. Alphabet, Amazon, Microsoft, and Meta platform Facebook were also down more than 2%. Over the last weekend, about 6.5 million people passed through TSA checkpoints, according to Barron's pattern. Airline spending was up 91% year-over-year in March 2022. Airline stocks are starting to take off again. Some airline stocks were up last week despite COVID outbreak in Asia and started to also surge in the US, including the new variant. The Russian Guide missile cruiser sank in the Black Sea Friday. This comes as a Russian training industrial unit and gathering aviation force in the effort to ramp up from an offensive operation. This is coming from Ukraine, the news, so I don't know right or wrong, but I'm just telling you. U.S. stock market will close on April 15th for Good Friday. The People's Plan of China, again, it announced that it could cut 25 basis points in interest rate. Stock market in Europe, Asia, and Hong Kong will close Friday and remain shut down on Monday. For the week ending, again, it wasn't a pretty real. All three major indexes were down. And crude prices jumped almost 3% a day and nearly 9% of the week, as hijacked once again by supply scale news that European Union might face a ban on Russian oil import. Gains in oil were limited early in the day as Chinese refiner preset to cut crude throughout this month by about 6%. But news of proposed EU ban it will actually kind of make it drive back up. Crude global benchmark Brent set up to higher 111.7 per barrel. For the wheat, Brent rose 8.7%. For the WTI is actually kind of rose 8.8% after 30% top over 2 previous week. As Biden was trying to pull more reserve out there. Now let's talk about the JP Morgan. This is a graph of JP Morgan. So he come a release earning and revenue was actually 30.72 billion compared to the forecast consensus of 30.63 billion, but earning per share was actually slightly lower than expectation of $2.63 per share, which you can see the yellow line is the forecast, and the green is the blue is the revenue, and the gray is the earning per share. So a lot of time you can see that back to March 2021, which is last year. JP Morgan was well exceeded above expectations, and so does the next quarter way above, and then you get a little tightening, and then get a little tightening, and then now this is almost just, matching the revenue still well, but the expectation of earning per share you can see going down. But and also you can see the bar as well. The earning per share is also keep dropping for JP Morgan. So that's just something to think about. That's also why the stock went down more than 20% since January 12. Told investor in January that expense in fourth quarter rose 11% from a year earlier. The U.S. largest lender, which report Wednesday before market open, expecting to rise 8.6% first quarter. Borrowing at the 25 biggest U.S. firm rose for 7 consecutive weeks, with loan 5.8% higher as of mid-March than they were a year earlier. So there's still a lot of borrowing going on. That's why the revenue is still going up a bit. But then because of the increase of pay to the executive and other people, Wall Street, trying to grab the talent people to pay more compensation. As you know, inflation go up, people also need a higher pay. So then that was actually hurting the company quite a bit. And also, you can see that the stock, I didn't show the graph, but we're up at the beginning of April 8th, just a week, a week before the earnings announcement. There's also have speculation about the market, the performance of JP Morgan, but dip on the 10 and then up again 11. But then since then, from the 11 last week, you keep going down at the downward trend from a peak of $136 to $125 now. Banks stop viewed on future hedge and benefit on interest rate hike, but warning on the increased cost and outlook, creating investors uncertainty about U.S. economy. So, I mean, this stock probably would be good to buy, but JP Morgan, but you have to look at it. Also, Wells Fargo reporting disappointing earnings as well, so that may be another one to track, because Wells Fargo is a little cheaper, relatively speaking, in terms of you don't have a lot of money from a retail investor, you need to buy bank stock, then Bank of America, Wells Fargo, and JP Morgan. I'll look at all these three together and then make a consideration where you want to be. Bank of America will be reporting earnings down for a week. So on Monday, we'll continue Bank of America. Other financial reporting earnings, Johnson & Johnson and Netflix will be reporting on Tuesday. Netflix analysts are expecting $2.95 a share profit on sales of $7.94 billion. But Netflix have been really under the pressure, under the water. It was from 500 last quarter. If you look, it was from 500 plus dollars, now down to as low as $330. So Tesla analysts expecting $2.24 a share profit on sales of $17.63 billion for Tesla. Kinder Morgan, Procter & Gamble, also another large corporations, expect earnings per share of $1.30 on sales of $18.7 billion. United Airlines will also report next. American Airlines, AT&T, Dow Chemical, Snap, Union Pacific on Thursday, and American Express, SAP, and Schlumberger will be reporting Friday. I mean, there's a lot more than on this list I just mentioned you, but trying to pinpoint the big one. So we are now in the earnings season again. Hopefully there will be a catalyst like strong earnings to drive the market upward momentum, and we'll be just doing fine. Fed Chairman Powell will be again on meeting of the International Monetary Fund on Thursday and later in the day. He's still to take part in a panel discussion of global economy. So we see whether he's saying they're going to be positive, how things look in the future, and what they are going to work together to drive. I mean, most of the countries have decided to raise interest rate to come back for inflation, because not just U.S. but the rest of the world also experience that. So whatever the U.S. story is, it's not necessarily the true explanation of why inflation is happening, but definitely supply chain probably has something to do with that. And also, China will be releasing data on the first quarter GDP on Monday. Investors will likely be more focused on March figures on retail sales, fixed asset investment, industrial production. We also look for more about stimulus given the challenge of COVID outbreak in China, and that could be at least in the international stock, Chinese stock. Hopefully, will have a rebound. Again, there was a delisting earlier of the month, if you all recall, that the process to start into really wet territory of all these Chinese stock, but then they got rebound as the pressure, and also the talk between China and U.S., get to alleviate some of these worries. The state PwC, we should work cooperatively on fighting COVID and hope you're over soon and life is back to normal. I mean, for most part, life seems to be normal, but then again, with the increasing surge of the COVID in the U.S. and Europe also starting to find the new variant XE, and Asia still continue to have a lot of cases. I mean, you still need to be concerned. But again, I hope there will be new new injection vaccine invented for the new variant, and eventually it's not as bad as Delta. So then people no hospitalization. Then you may be actually be subject to open the world again, and we can be continue commerce, and things can still come be imported and exported in different countries. So that would be kind of loosen up the supply chain. So then when that happens, more money going back and forth between countries, things will get better. And also hopefully the war with what I just told you about Russia, vessel tank, you will actually get to the ending point of this, and with an agreement, hopefully Ukraine and Russia just will reach an agreement and stop the war and get it over with, so then things, at least one less thing to worry in the market. How about you have a great and wonderful week and great health, and again, a happy Easter. Thank you.